I will say there is right now a reconciliation bill that has an increased likelihood of passing Congress in the next couple of months, maybe even this month. If it does pass in its current form, most of the tax changes are tax credits. And so we will see our clients using tax credits a lot more often than they may be now for specific tax benefits. So before we go into the weeds on some of these complex credits, let's lay the foundation and talk about what is a tax credit and why is that different than a deduction? Well, we have to realize that there are two ways that Congress can incentivize behavior in the code. The main two ways they do that is by making an expenditure deductible off of your taxable income, or they make an expenditure eligible for a tax credit. A deduction simply, again, reduces taxable income, which means the actual savings in the person's pocket is the amount of the deduction times their marginal rate, right? We're going to look at the highest rate in the graduated system that their income is subject to. That is going to be the tax savings from a deduction. A credit is actually a dollar for dollar reduction in the tax liability. So you can see that a credit often saves more tax compared to a deduction if they're in equal amounts. So I think the best way to show that is with an example. Let's say Sarah has a $3,000 deduction. How much it actually puts in Sarah's pocket depends on how much income Sarah makes. If her marginal rate is only 22%, for example, it saves her $660 in federal income tax. Now, if she's at the highest marginal rate, 37%, it reduces it by just over $1,100. This is a reason why many deductions are limited by income, is to avoid folks who have the highest income levels from benefiting the most from various deductions. But if a deduction has no income limit, then the higher the income the individual is, the more they can save from that benefit. Now, let's just say Sarah gets a $3,000 tax credit instead of a deduction. It actually reduces her tax liability by $3,000. Now, there's a caveat here that assumes she can fully use the tax credit. And we're going to learn that that is a barrier to some people. It may look on its surface to be really lucrative, but if they can't use it, they might lose it. And so we have to know those types of provisions relating to various